Hey folks, and welcome to the Pipnotic Symposium for the 29th of November 2022. Okay, so today is going to be a little bit of a different session. We're going to just run through our account, the past maybe 10 trades or so, and have a look at the winners and the losers and do a bit of an aftermath, because I think that it's super important that we understand why some trades won and why some trades lose. Okay, and obviously some trades are just going to lose, and that's fine. But for the ones that do lose, that lose for unknown reasons, I think it's important to try and understand why. And also we're going to look at some of the winners, and we're going to see, well, how did these trades work? Was it a quick move to the target? Was it a slow one? Were they closed out early? If so, why? And so we're just going to talk about these topics because I think they're just super important when we're trying to build an intuition for the markets. Okay, so if we look at yesterday's post, we can see here that this is kind of the general pattern for this for the account that we're trading currently. Okay, we've got 40 trades. This is, I think, yesterday or the day before. We have the parameters that are most important are average profit trade versus average loss trade. You want your average profit trade to be bigger than the average loss trade. This is super important. Okay, and then you only need to win about 50% of your trades if they're roughly the same. Okay, and so our short positions, we're winning about 54%, and for our long positions, we're winning 62%, which is remarkable. This is a very high number. Okay, and so due to the fact that we have average winners that are bigger than average losers, plus we have a 50 and a 60%, let's say 55% on average a hit rate, well then we're in absolutely smoking condition. Okay, so we just want to keep these parameters looking like this to ensure that we are going to see a continued upward slope in our equity here. Because if we have a look at the account now, we have a bit of a change since yesterday. We've got pulled in a ton of trades yesterday, so let's just zoom down. I think we can see most of this. Okay, so I just moved that now so that we can see precisely what we need to see. So now we have a few more trades. We've got 6 more trades. These are filled since yesterday or the day before, I think yesterday, but we got a bunch more trades since then. Okay, so that was a lot. And so this resulted in an increase in our equity by about $1,000 or $1,500, which is super good. Our average profit trade is looking good still bigger than the small one. We have average short positions 1. See, this one went down a little bit, and this one here went up a little bit, long positions. So we are actually winning more long positions than we are short positions, and we're actually winning an incredible number of long positions. So this is really interesting. Okay, so let's have a look at the terminal now and kind of just meander through some of these trades. We're not going to take all of them. Let's take maybe the last month. That's maybe too many. That's a ton. So let's maybe take the last week. The last week. Okay, that's fine. You know, we want a few more losers. So this is important. Okay, let's go a couple weeks, roughly. That's a lot, but there are a lot of them are cancelled and expired and whatnot. So, okay, so let's start off with these trades here. So we have a lot of tiny ones. Okay, so this was daily supply. Let's go to the daily chart, and we'll click this on. We'll see where we got into the trade and where we got out. So this was an incredible entry. We sold just about at the sell zone. Let's see where. Probably got in. This is pretty much where we got in. Yeah. Price went up to the edge of the area and then we turned around. And for whatever reason, this trade was closed out a little bit early, but this would have hit our profit very nicely. Something else that I want to draw your attention to is the size of the wick in this area of supply. This is really important to be mindful of, especially if you would consider to put your entry here at the edge, the lower edge of the box, which is what you would normally do. Number one, the entry should normally go at the high of the candle that left, which is here. So that gives us a few more pips profit. And when you have a candle that looks like that, I mean, this is telling us to look on a smaller time frame. So we'll do that. We'll go to the 4-hour chart and do a bit of an analysis there and just see what that looks like. And you can see here that we have these very big wicks higher. And what wicks are essentially is price going up and then price going down. Price going up, price going down. Okay, this would be the wick. Okay, so price goes up, it goes down, and it comes up. Okay, so this would be on if this is a 4-hour price action, that would be like a doji. Okay, on the daily chart, it would look like that. Okay, and so what we want to do is we want to be mindful of the fact that price has been sweeping higher and then moving lower, like that. Okay, which this structure here corresponds to maybe this candle right here, where price, we open a little bit high, we go quite far up, we move down, and then we close almost at the low. Okay, so this is what this candle here looks like. Okay, and so price going up and moving down, this is flushing liquidity out, off the book. So you want to be mindful of that. So let's go to a smaller time frame and have a look. Again, some moving. We need to find that area because this is where we learn. Okay, here. Okay, and so now you can see another pattern, and the other pattern is that we can see these patterns that I've talked about hundreds of times, where price goes up, we move sideways at 1 bar, and then we leave. Okay, these are super price sensitive. Okay, and we have the same thing here. When price moved up, we moved sideways for 1 period, 2 period, and then we left. Okay, that's really good. And so when you see something like that, okay, on the daily chart, I mean, our entry was like this, but on the 1-hour chart, I mean, we would change our entry. It would be located in a different area. So let me find that again. Okay, here. So we would change our entry to the release candle, which is just here. This is the release candle, just like we like to do. And if you would feel so inclined, you could go to the 1/2-hour chart, which we probably don't have enough data. We do. We've got the data. And so you can see here very clearly how price goes up, moves sideways, and then we leave. Okay, so here's the departure candle. And why is this a departure candle? This is a departure candle because the close of this candle here is outside the range of the previous 2 distribution candles. So these ones are related. Okay, so this candle here and this candle here, they're in the same family. And the reason they're in the same family is because if you have a candle like this, the high, the low, then you have another candle here, goes like that. Okay, you want the body of the following candle, candle number 2 in this pattern here, this candle here, to be within the range of the previous. So you want the body from here to here within the range of the previous candle, from here to here, which it is. Okay, if this is the case, then they are in the same family. Okay, and then we have this candle here, and this candle, the body is not within the range of the previous. We have no wick. We have a little bit of a wick down here, so that shows no interest in moving higher. Okay, so what you could do in a situation like that is you could say, well, all right, we could even move the entry to this price point here, because this is a departure candle here. Okay, and you can continue to do this, but the problem with many trading platforms is that you don't have enough data, so you can't keep doing that. But this is good enough, and now it'd be interesting to see where price actually left. And let's mark off this, okay, because this is kind of we have distribution, and this is the high of this candle. So let's go back and see where price actually did react. So moving back, I mean, this is exactly where price went to. Well, we went a little bit deeper. So we went into the wick and we turned around. Okay, so we got in here. This was the daily area, but price went up an additional, let's go to here where entry would have been 35 pips. That's a lot. Okay, and we were able to identify or refine our entry simply by going to a small time frame. Okay, so we could have got more pips out of this. And so again, keep this in mind. Keep this in mind. It's super, super important to understand. Okay, and so number one, actually, I'll just type here. Number one, if wick time frame lower. Okay, this is super important. Remember that. If we have a wick, time frame lower. Okay, here we have a wick. The wick is from here all the way down to here. What does that mean? That means that we could probably have a look inside there. Our entry on this time frame would be here, the low of this candle, but on a different time frame, maybe we could move it even lower. And so we can just put that on here. Okay, this is a candle that left, so this is where we would expect price to have a reaction. Go to the 5. Okay, let's go to the 5 minute, not the 1 minute. We'll have a look. Yeah, that looks relative. We've got this pattern here, down, sideways, departure. Super powerful. So price will probably come to here and turn. Buy zone is right there. Okay, so this is what we have for this particular time frame. Okay, so keep that in mind. You see a wick, the chart is telling you to have a look on a smaller time frame. All right, so let's have a look at this one. What is this? Well, this was a test I was doing. We'll skip those. Let's have a look at this one here. The 1 micro lot was a test that I was doing. I don't want to look at those. Okay, let me remove all of these objects. And we'll have a look here now. This is a sell. Or maybe this is like the other half of that trade. I don't know. But this is the same trade essentially. We got one, no. All right, there are a lot of trades there. Then we have this one here. This is the next winning trade. Okay, and so we got in right there. It is 4-hour supply. You can see in the comment H4. And if you're not seeing that, you can right click and just click comments. Okay, you can't see it there. You go like that, click comments, and you can see it. Okay, and unless you're using buy and sell zones, you won't see this. This is just like a comment that we have when we use buy and sell zones to tell us a little bit of information about this particular trade. So this is a 4-hour chart. So we have to go to the 4-hour time frame. Let me do that quickly. Boom. So this is likely going to be, yeah, there it is. There was the entry. The entry was right there. Okay, price left. We came up and we left and we hit the target. We had a 1 to 2 here. And we filled that very, very easily. And we could have gone a 1 to 6 maybe, or 5 even. That happens as well. But we got our profit out of that trade, which was lovely. But looking at this one here, the reason that I like, for example, the reason I like this entry here instead of this one here is because this one is much closer to price. This one is really far away from price. And so when price comes back to this rectangle within 20 periods, so 20 times 4 within 80 hours, that means that the sentiment is still intact. So the reasoning behind this bearish departure from this area of supply is likely still valid within 20 periods. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The 12 times 4, so 48 hours, 2 days after this area was formed, price came back. Okay, so maybe not much has changed during that period. Okay, and then price poked into it, and then we left, and we had a lovely, lovely reaction. Okay, and so, I mean, the whole idea behind the dashboard is that because we're sorting after age, we are seeing areas of supply and demand that are still young, because the young ones are the ones that are still affected by the sentiment and the most recent economic data releases and kind of the pulse of the market here and now. The ones that were formed a year ago are completely different because the fundamentals have changed, interest rates have changed, consumer numbers have changed, unemployment and employment numbers have changed. Everything has changed if it's that long ago. And so when price comes back up to that area later, the premise for that area of, let's say it was supply, is maybe no longer valid. And in a situation like that, there's no reason to sell. Okay, because we can expect price to eventually begin to erode away at that bearish liquidity because there's no interest in selling that particular market any longer. Okay, so focus on bleeding edge price. All right, let's look at this one here. We have another one. This was another one right here. So we sold at this area of supply. I remember this one very well. This is 4-hour supply as well. Price went up. We poked into our our target almost immediately. We went 2 times as far. And then price turned around and went back up to our entry and beyond and moved to the stop. But we hit our target before that. But that was another really nice example. And again, this one is a little bit old. It's a little bit old. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 2, 3, 4, 5, 6, 7, 28, 29. So that's 29 periods. That's a long time. Okay, but not too old because it still worked. Ideally, I would have liked price to poke up into this area within 20 periods, but it came up more than that, 29 periods ago, and it still worked. Okay, but just keep in mind that the longer you wait, the less validity that this bearish move has for another short. Okay, typically, this is my observation at least. Okay, so you can see the price went through it. So I want to understand why price went through it. So what I'm going to do is I'm going to mark this off. I'm going to mark off this area here. Then I'm going to do an X-ray. Go to the hourly chart because I want to know why price went further. I need to understand why. You can see here, again, we've spoken about this hundreds of times. Here we have chaos, clarity, more so there, more clarity here. Okay, and so I mean price just went above this range. If I draw it, this range here, and it went up to this edge, this candle here, which essentially poked up into this area and left. But there's not enough clarity, so we have to go to smaller time frame. Okay, scrolling back, there is a slingshot in there. I know it, I can feel it, and there it is right there. So here, okay, price went here. Why did it go here? It has to go there. Why does it have to go there? Because this is a supply, price departed. We distributed for a while, price moved up to this area, and it had to move up to this area in order to drive price low. So we found the sellers at this area here. So if let's move this now, and we'll put our rectangle right there. And then we go back, boom, we see exactly where we went. And this is exactly where price went to. I mean, exactly. Let's see. Okay, so the higher this candle is, okay, it's difficult to read. 19848. 19848. Okay, or maybe just 9848. Let's go back here. Let's zoom out a little. 9858. So price went a little bit further. Let me see, maybe just gotta make sure I'm not fitting. Okay, the high. It's 9858. My bad, I couldn't read. And this went to 9858. It went exactly to that area, to the pip. And then we had a huge run all the way down here. 66 pips we went down. We got out at 33.7 pips. That's crazy. I see that number everywhere, 337, absolutely everywhere. That's uncanny. But again, look for the chaos and look for the clarity. If you're selling, you have to look above the chaos to find the clarity. If you're buying, you have to look below the chaos to find the clarity. Okay, and this is just a very beautiful example of that. All right. Let's go to this one now. This is a loser. Okay, so we wanted to sell there. So this was another 4-hour trade. So there's probably an area there that we remove. Here we got it right there. Right there. But look at this. Look at this. See here? Does this look like a nice clean departure? The departure candle. The high of that candle is just here. So we're going to mark this off. Put it up here. And then we'll have a look on the smaller time frame. Okay, so we got in there. Let's go to the hourly and have a look. And remember that every time you do this, every single time that you do an analysis of a trade, a winner or a loser, then you'll see these small details. And over time, these will become an intuition. So you'll look at an area, for example, an area to sell, and you'll have a feeling in your stomach that's saying, I have a hunch that I have to be a little bit more careful. I have to go and do an X-ray. And this is why I wrote the X-ray tool that you all have access to. The X-ray tool shows you what's going on inside candles like that. Maybe some of you are using it, maybe some of you are not. But here, you can see that we have kind of a mess. We've got this here, and we've got this here. Okay, so a little bit different. So let's now look at this. Okay, this is a little tiny area, but also notice, that this is a reasonable area, but I mean this stuff here, this is really chaotic. This is just a lot of trading around, isn't it? And so we almost have to look higher to find that. We'll leave this one on. This one's gone. We're going to remove that. Actually, we'll leave that on just so we know where we traded. But if you look at this, I mean, this is exactly what we saw earlier, isn't it? It's the same kind of thing. Okay, so prices had to move beyond that. Just mark this off. We'll go like that. We'll mark the high of this range, which is essentially the upper edge of this box. Let's maybe have a look on a smaller time frame, see if we can see something in here. No, this is what we've got. We've got the departure candle here. Chaos, clarity. These are our little micro nodules, and we've got, let's just go like this here. We've got that there. And let's see where price reacted. Okay, so price went, let me remove this one. Price went all the way up here. We have to see where that is. Okay, price went up to this area here. This is where price turned. Exactly there. And if you look at that, it essentially it's showing we have this area of distribution. Price moved sideways and then we left. But above that, you can see that we have these wicks moving higher. But this is a really difficult one to do. This is pretty difficult because we have all of this stuff here as well. And so you would have either got stopped out or had to put a really wide stop loss on this position, or you would have missed a trade because we were looking to go a little bit higher. Up here. Okay, this would have been the ideal place to get in, and we have the supply further higher here. Okay, so this is a difficult one. We got stopped out because we took the area that was just here, And did price even stop here? Price did stop at this area here. If we would have had a 2 times the area stop, which I normally do, I have exactly 2 times the area, price would have gone through it, would have got really close to the stop, and then would have moved away and hit our target. Okay, but we didn't do that. We didn't look for the clarity. Okay, so very, very interesting. So the takeaway for this trade is we did not perform an X-ray, and it cost us $1,000. So next, okay, so remember that X-ray. Next, go to this one here. This is also a 4-hour trade, and we sold there. Let's go to the 4-hour. Maybe it'll make sense. Okay, so we wanted to sell here, at this area here. And price just completely tore it to pieces. Okay, so now we're actually sitting on a lovely 4-hour demand, because this is the area of demand that removed the supply. So we poked into it. We already had a 1-to-1, and now we're feeding back into it. So let's see if we are able to move away from here. But this one here, was this a good idea? Was this a good idea? And I think that we can argue that it was not a good idea. And the reason it wasn't a good idea is because price has already traded here. It traded here, and it traded here. And the sell zone, the slingshot, is right here. And so you could have done that if we were paying attention, which we were not. Or rather, you would do like this, and the slingshot would have been right here. Right there. Okay? Price went to it. We went almost to the upper edge of this box, and then we turned around and came back. Okay, but it's super easy to be clever when you're looking at historical price. But we're just doing the aftermath. We're trying to focus on what it was that the price did. But note to self, price has already been here. Okay, so this is just kind of price discovery. Price is trying to find out where we've got buyers and sellers. Okay, this is not an imbalance. This is an imbalance. This down here is an imbalance, okay? And so ideally we should have been selling higher, okay? And it cost us another $1,000. Okay, let's move on to the next one. This is just here. So we wanted to buy there. We bought there. Actually, I think this trade was from, I remember closing this out. Maybe this is from today. This is from yesterday. I closed this one out just here, because I felt that we were going to have a correction. And so we got our 1.1 or 1.2 to 1 reward risk. And now we are beginning to slow down. I'm thinking we'll probably continue to wriggle higher, or maybe even visit this area down here, which looks quite nice as well. Okay, so this one worked out. Why? Well, we actually went through it almost to the bottom. So let's find out why we almost went through it. This we need to know, because it'll help us put on a better entry next time. You can see this candle's a release candle. The low of it is right there. So that's pretty close, isn't it? So going to the 1 hour chart and having a look. No, there's not a lot of clarity. We're pretty close to the low of this camera, but then we're kind of splitting hairs on this time frame. So let's have a look. I mean, that's not a super beautiful area, is it, on this time frame? And so I think we would have to suffice to say that if we were a little bit more careful, we would have put our entry in here on the release candle and been done with it. Price went down just a little bit. We moved where we closed above the area of demand, and then we started to wriggle higher. Okay, so that was a difficult one. This one I like. I like this one. I've been thinking about this quite a lot, and I've also been thinking about this one here. I like this one quite a lot. I like this one here, and I think this one's kind of interesting as well, but we've traded quite a lot down here, as we've also traded here quite a lot. But this to me looks like fresh demand, because price has been happy moving sideways for a while, and then we finally popped higher. We tried to move back, but we failed, so the buy zone is established for this area of demand. So we would do something like that. Entry, stop, rather. Entry, stop, and then target higher. Okay, so that would be an interesting trade, and that's waiting to happen. There's no tests beyond this low here. So if price manages to raise down here, which is historically shown to be a turning point, well, then we're probably going to see some people get involved and start to buy. All right, good. So let's remove all these objects and continue to the next one. See, so we bought here this lovely pattern, boom, boom, boom. I love those. They work so well. We went up, we hit our target, and then we came down. Okay, so that's a good, this is just a beautiful pattern. And we didn't really go much further into that area. If we see, maybe we went to the low. We didn't quite get to the low. You see there's probably maybe 5 pips below. So if we were to put it entry here, we wouldn't have got into this trade, and we would have got maybe potentially stopped out. Okay, but that was a nice trade here. Okay, then we have this one here, which is this morning. Okay, so we got in up here. This was another. Oh, this is daily supply. This was a manual trade. Let's see why. I don't know. I can't see why. I thought it'd be a good idea to sell there. So let's have a look and see why. Yeah, I mean, it's kind of, we have this little price structure here. Price came down, we pulled the slingshot back, and we went slingshot. So we're just above the slingshot here. There's probably more clarity on the smaller time frame, but then we had a nice move away, and I got out of this trade at a healthy profit because I felt the price was going to continue to wriggle higher. I think that the pound will probably retrace. We probably were going to continue to move south a little while before we move higher, and we're probably going to move down to around here. And so we're going to have to redo our analysis here, because this looks like chaos to me, doesn't it? Okay, and so we have some fresher, nicer areas down here. Okay, but that doesn't mean that this won't work. It just means that we have to maybe have a look at this. And looking at that, that's not a terribly beautiful entry, is it? So I'm going to reassess, which I do a lot. I come back and look at areas later, and I often move them. This looks like a better area. Yeah, something like that. We'll leave that there for the time being. Okay, we have one more, this one here as well. Let's see what this is all about. This is a candle. I thought this was a Kiwi dollar. I had a Kiwi dollar on another account as well. This is just a buy, just here, this area here. I see where the price go to. I almost bet you it's right to the pip here, because this is where, boom. Okay, we stopped right on that, and this is where we turned around. Okay, and so I just felt that this trade was kind of invalidated. I think it's still going to go high, but I just didn't like it. I didn't like buying here because we had a little bit of exposure to the downside. I like this one here a lot, so we could put that on there. As a matter of fact, we'll just have a look on the 30-minute, see if we can see if that would be a good idea. Maybe it doesn't make sense on a 30-minute. We can have a look. Not terribly. 1 hour. This looks a little bit better, but we have chaos there, so maybe something like that. Okay? Or maybe good old-fashioned rule of thumb. Boom. Like that. So that could be an interesting spot for us. Good. Well, we've covered the trades that we've done over the course of about a week and a half, which has been they've been really good. What's that? That's almost 6% in a week and a half. That's incredible. That's really, really good. So we've done almost. Well, that's just remarkable. It's not always like that. We've been quite lucky. But this is these are the trades that we've been posting I've been posting in the premium analysis, kind of go through these and show you what we're doing, and it's a very, very simple practice. Okay, and if you have buy and sell zones, it's super easy. I'm just going to put this one on. I like this because this is kind of below the chaos where this happened. I'm just going to put that on. If you have buy and sell zones, it's super easy. If you don't, it doesn't matter. You can just put these on manually. Okay, and so essentially, it's just a question of moving through these areas, these pairs one by one, and just finding the ones that speak to you and are in alignment with the things that we've spoken about today. Okay, so this one here, the entry is here, but maybe I'm going to go and have a look on a smaller time frame just to make sure that this is indeed a good area to do it. Here, this is a departure candle. This is the low of it, so the entry is on the low of the departure candle, which I like, and so I'm quite confident with this trade here. Okay, good. Well, I'm going to leave it at that. There's 35 minutes. I hope this video is useful. If you have any questions about the video or about any of our tools or the method or anything else, please do shoot me an email or write a comment in the video below, and I'll get back to you. Thanks for watching.